Greetings and welcome to my channel. I want to present some tax scenarios that give a little perspective on how much money many people pay, or rather don't pay, in federal taxes. While I have always felt I have had plenty of money and income, the federal government has barely taxed me over the years. I'm not including Social Security or Medicare since those are insurance programs. So, how much does a couple filing jointly have to earn before they pay taxes? How much would the median income couple pay in taxes? To make this simple, I am only looking at W-2 income. I am ignoring additions and subtractions, since for some there will be a net subtraction and others will have an addition. I will also only use the child tax credit since it is the most commonly used. I will run the numbers with 0, 1, and 2 qualifying children and only children 6 to 17, since below and above have different credit amounts. For the median couple, I am using the U.S. Census 2020 median couple income of $101,517. I will include one qualifying child as a median for all couples. Statista reports 1.93 children for family with children, and the IRS average married filing jointly child tax credit for 2019 was about $1,100. For 2019, the credit for each child was $2,000, and while some couples make too much to qualify for the credit, the median couple does. I feel it is reasonable to assume from this information that the median is somewhere between 0.55 and 1.93, so I went with 1. Let's look at what the maximum a couple can earn without paying federal income tax. I started by entering zero tax due at the end of the form and worked backwards. Next, I entered the child credit for 0, 1, and 2 qualifying children on line 19. This tells me the most tax each couple can have and still end up paying $0 in taxes. I used this value to reverse look up the taxable income that would produce that tax and entered it on page 1, line 15. I entered the standard deduction, and since this has changed, there are very few people who now itemize, and even fewer at the lower income levels we are looking at here. I added the taxable income and the standard deduction to find the total maximum income that will not be taxed for each scenario. Each dollar over this amount will be taxed at 10% for the next $19,900, then to 12%, and so on. If you have heard of the term marginal tax rate, it means what is the tax on your next dollar of income. So in this case, if the couple with one qualifying child has an income of $40,000, then their marginal tax rate is 0%. If it is $55,000, then their marginal tax rate is 10%. You'll notice there's quite a significant change between 0, 1, and 2 qualifying children. With 0, the maximum would be $25,100. For one child, it's $53,400. And for 2 children, it's $78,400. And the reason for this is a $6,000 credit that the couple with 2 children receives offsets about $50,000 worth of income, because about 10% of $50,000 is $5,000. Now, some of that's at 12%, and that's why it ends up being about $50,000 altogether, because some of it's more than 10%. But it's a significant change, to say the least. For the median couple, we will start at the beginning of the 1040. We enter the income and standard deduction to find their taxable income of $76,417 on line 15. The tax table indicates that their tax is $8,773. We add a credit for one child, which reduces the tax liability to $5,773. We can use this number to find their effective tax rate by dividing $5,773 by 101,517, getting about 5.7%. In this couple's case, their marginal tax rate is 12%. Until their taxable income is over $81,050, then it would be 22%. Keep in mind that higher tax rates eat away the effectiveness of credits more quickly. My own experience over the years is that the tax system is very favorable to those with lower income and children. I never felt lower income, but there are many years where my wife and I received more money back than we paid in due to child tax credits, including childcare. We also qualified for savers credits even though we contributed to Roth IRAs. Yes, if your income is below a certain threshold, you can get a credit for contributing to a Roth. A good portion of my Roth contributions were effectively not taxed when I made them, and even provided a credit of 10% some years. They'll grow tax-free and be withdrawn tax-free. In summary, the child tax credit is a big deal, especially at lower income levels. People need to understand how the tax system works and how much they are actually being taxed so they can make good financial decisions. Our fictional median couple falls into the 12% marginal tax bracket, which means that each additional dollar they earn is taxed at 12% until they reach the next bracket. Thank you for joining me on this topic. If you have suggestions for future videos, please leave them in the comments. Consider subscribing if you like this and would like to learn more about personal finance. And if you're going to retire, retire to something.